Nischal Maheshwari of Edelweiss Financial Services joins us now to take us through the impact on the stock markets. Nischal, no, actually the stock markets are sitting pretty close to 6,000, despite the fact that we have got a series of lower and lower estimates for GDP growth and prospects of things getting even stickier if the Reserve Bank's tightening stays. What are we staring at? And overbought markets? Are we going to see some sharp cuts? Or, liquidity is another game altogether?
I think, Lata, the surprising thing has been the polarization, the extent of polarization which has happened in the market. So if you really look at it in the last 15 days, most of the banks, and banks has got around 27-28% on the Nifty weight. So the large banks are down anywhere between, like HDFC is down around 5 to 6%, and the larger banks are down, like ICICI and all, down 10 to 12%. Now that has also not brought down the Nifty. So if what has actually taken it up is IT levers, which is at 720 rupees, and to an extent pharma. So I think there is a huge amount of polarization which has happened, and that is what is supporting the Nifty. On the underlying, obviously the economy is not doing very well, or our economy is in a pretty bad shape that way. So it is not truly reflecting what's going to happen. And what we broadly see is a 55 to 6100 range, which we have been maintaining for some time. I believe, yes, it's a good time to take away profit from this market.
Okay, Nischal, hi, afternoon. I was reading a note that your banking analyst put out with regards to what the impact of these RBI norms would be, and he mentions that he would still like to stick towards quality bets in the banking space, names like HDFC Bank, Axis Bank, etc. Basically the ones which are retail funded franchisees coupled with stable asset quality metrics. From the banking space itself, if you had to sift the wheat from the chaff, what is the pecking order looking like? Which are the stocks that you would stick with, and which are the stocks that you would avoid?
I think with this thing there are two things which are coming. One is your immediate problem would be obviously growth. Now obviously the growth was not very good, but I think further this is going to put pressure on the outlook on the growth. The second thing is given that some of the banks who have got wholesale deposits as a funding would be seeing problems because the short-term interest rate goes up, and their ALM mismatches basically is going to increase the cost for them. So given that the demand is not strong, I believe the cost will not be able to pass through, and there will be a squeeze on the margins. So and the third is the asset quality. Now I think given these three parameters, I believe the stocks which we like, HDFC, which has got strong as far as the CASA is concerned, 45% plus kind of a CASA. Similarly for Axis Bank, a very strong retail franchise. And secondly, as far as the asset quality is concerned, both these banks are pretty well. And in case of Axis, the retail side of the asset is picking up very well. So I think that way Axis is also going to do okay. So I believe these are our two top picks, and I think we can avoid stocks like IndusInd, Kotak Mahindra, Yes Bank in the private set.
Okay. What about your buys in the IT space, Nischal? They were of course better than expected numbers, and the rupee will continually be a support.
In the short term, we continue to believe that SCL Tech and TCS is going to outperform the market in the large cap space. But on a longer term basis, we believe Infosys has got good value. And for a more than a year horizon, our top pick is Infosys. But I think the short term, HCL and TCS will outperform.
What about L&T and its comparables like BHEL? One of them, of course, has gotten decimated. Is there more to sell in these stocks?
Given the outlook, and given that we are not looking at any recovery now for the second half of the year also, I believe there is going to be pressure. If you look at it yesterday's L&T results also, what was disappointing is the domestic market side of the business. Though he has got orders, but they are not able to execute it. And again, there was pressure on the margins from the domestic front. So I believe there is going to be pressure on the stock. both in case of L&T as well as BHEL, given that the outlook doesn't seem to be very good. And the stock is still not very cheap as far as Larsen is concerned.
Okay, I'm just going to try and squeeze in one last question, although we don't have too much time. The telecom stocks have actually done quite well in the last 1 month. So they've been inching higher, be it Idea, Bharti. Would you back any of those names?
We prefer Bharti over Idea, given that Idea has run away quite a bit. Now, our view remains to be domestic side of the business seems to be doing pretty well. Most of the regulatory problems as well as the competitive environment, I think that is sobered down quite a bit. So I think the domestic business is doing well for Bharti. Internationally also, last quarter they very clearly mentioned that they have achieved the target revenue of around $5 billion and they are going to focus on the EBITDA margins. So they are given a guidance from 26 to 30% is what they are looking for EBITDA. So I think that improvement is yet to be factored in case of Bharti. So valuation wise also Idea is ahead of it. So I believe one can shift from Idea to Bharti at these levels.
All right, Nischal, out of time. Thank you very much for joining us. So that's the reality touch. Sensex is being held up by, on the Nifty is being held up by a few stocks, but it's decimation all around and definitely a fear of buying more. We'll take a break and we'll take the same questions with a technical expert. Sudarshan Sukhani joins us.